Actually, just begin with a sort of general overview of all the markets. And looking at it here, the biggest mover is pretty much in crude oil, which is up by 2.4%. However, it's been stuck in a quite big range lately, so hasn't really made any headwinds. It's sort of neither up, neither down over the last few days. And then, well, gold is up a little bit. Stock market's up a tiny bit as well. Otherwise, relatively quiet um, in the market. Aussie dollar is probably the currency that moves the most and is down by 20 pip today. So let's begin with the euro. So the euros, unfortunately been stuck in what looks like a wedge and been turning sideways for quite some long time. And it's not looking that encouraging. You see the market looked like it was going to head higher at one point, moved upwards, trying to leave behind that wedge. But as you can see now, the price is pretty much back into the wedge, which is bad really, because it just tells us that the market is probably gonna move back down to the middle. And the reason for this is that right now the Federal Reserve might cut interest rates over the next few months, and at the same time, the economy the economy is not too good in Europe. It's not too good in the U.S. So both central banks are doing the same thing. Most of the time, you get a nice trend in the market when one central bank is doing something like increasing interest rates and the other one is cutting or so. That's why, for example, if you look something at the Aussie dollar versus the USD, pretty much since 2018, at least, it's been going downwards. Hasn't been an easy trend, but it's definitely been going lower as well with the New Zealand dollar. It hasn't been an easy thing, but at least have a bit of bearish momentum here, right? You don't really have that here because of these two central banks. The other thing as well is that when there's a lot of market turmoil here, people buy euros. Um, so maybe we could have pushed a little bit higher here, but it's not really doing so. Now, to trade this in the short term, it's a bit too early to give up um, on the bullish view, because at least in the short term, we're still creating like higher and higher lows. I know that this is a slightly lower low than this one, but this is such a weak low, so and not an important low. So that's why I don't really care too much about this one. So my outlook for the euro in the short term remains bullish, and as I've been saying over the last few days, around this buy zone, that's really where I think people will look to buy, and I think stops are gonna go below 12.18, and then after that, you just need to wait. Fortunately, investing and trading is usually about waiting, and that's just it. GBP versus the USD, it's not really trying to move much higher now. My idea or my preferred idea would have been just to buy on a break to the upside, but that never, well, it's not really happening, right? So what it's doing now instead is just trying to challenge, what can't go up usually goes down. And we're looking at it from still within this big range. And I think, as I said before, if Boris Johnson is elected to become the new Tory Prime Minister, the Tory leader and Prime Minister, then probably it's going to increase the likelihood of a no-deal Brexit. And then now as well, yesterday the Parliament had an opportunity to sort of allow the Labour Party, which is the biggest opposition party, to push through a day where they would try to legislate against no-deal Brexit. But that was voted down. So doesn't mean that automatically there will be a no-deal Brexit. But what is happening here is that you can't, well, at least looks like that, you wouldn't be able to legislate against that. Because up until now, when they have voted, they of course voted to, they're not voted for a no-deal Brexit. The demand for that is quite bad, quite low, sorry, across everyone really, and but they haven't. But yesterday the vote sort of limited the possibility to legislate against that. So technically, it could be in a few months' time. When people say, "Look, this is not going to work. I want to have a no-deal Brexit," which would not be too so unsurprising, because so far, the way the UK has been heading into these negotiations is that they've been doing it sort of the old way, right? Not being very aggressive in the view and positions and stance. Um, on the other hand, if you have examples with Donald Trump, right, the way he has been dealing with it, and he's been getting his way through. So even though not always, of course, and obviously they still haven't built that a wall, have they? But he's still, there's some hard tactics, negotiation tactics there, and I think they want to allow for that to happen. And I think that's really what Boris Johnson is going to be doing. He's probably going to be playing very, very. It's going to be very tough with the EU, and let's see what happens. I still think the EU will potentially not budge, just because of the size. It's always very difficult when you're the little one, and so we'll see what happens. But all of that obviously can increase the likelihood for a bearish market reaction, because from an economic point of view, people don't want to. It's not good for business in the short term, and in the short term, we're talking about 7 years or so, because that's how long time it takes to get some sort of a new deal in place. So, 7 bad years, I guess, and then maybe some good years. Um, Not for everyone, of course. I think the first thing that's going to happen is going to be some decent tax cuts, like Boris Johnson would like to do. So if you're a high earner, you'll probably be relatively okay. Maybe if you own a property, maybe even also. But everybody else that are working in fields that are very competitive, I think it could be bad in the short term, 7 years that is, something like that. So let's see what happens. But with that in mind, of course, we might take out 24.78. So if we do take out the low, I think we could probably trade lower. Now, if you don't believe in all that and you think like, come on, this is not going to happen, and I could be all wrong. Maybe Boris Johnson will be able to negotiate a good deal. Then you just focus on the big picture. And the big picture here is range bound. So it's nothing wrong with potentially trying to buy down here and sort of looking for the price to move back to the middle. So that could be something if you feel comfortable with that. I can tell you right now, there's other currency pairs that are at least trending, which makes much more sense to trade than this. But if you want to trade it, then that could be one option. My only preference right now is for that short-term little move, potentially lifting price upwards. Here's the dollar versus the Japanese yen, and there's not a lot of activity here either. Summer is here, more or less, but it doesn't necessarily turn very quiet until July, August. But it feels like we're already in that summer period. The market wasn't really doing too much to begin with, so I guess some people taking some time off, because volatility here is terribly low. 95 pip or so over the last 10 days, which is nothing. I think here 108.96. This is where you want to be selling if you want to sell, if you want to go with the trend, and then just look for go down lower. Gold prices managed to bounce higher, and the price is really sort of trading within that range right now, right? So I think we just need to wait. You guys have a nice double bottom, so next time we trade below it, I think we could have a decline, maybe $21 per contract or so, go down like that. Alternatively, take out the high, and this is definitely a space to watch. Something like, yes, and it's quite difficult to. It's not very difficult to. I mean, it's not difficult to imagine, but gold used to be sort of the Bitcoin when from the time I started. So I didn't start to focus on the market in 2001, but I started to focus on the market here, and actually I started trading in 2006, but I remember focusing much more on gold in 2009. And this is a logarithmic scale, but you can see here what is rather typical for trending markets, and for any market really. Here you had a 656% move from 2001 all the way to 2011. Okay, so that's 10 years of rally, and that's a crazy move here, a bit like the Bitcoin, right? or like Bitcoin. But then after sort of that big bonanza, which this was from a trading perspective, you had a decline, and that market declined with about 45%. Now, what's happened since then did that since June 2013, we've pretty much been trading sideways here now. So trading sideways for a good amount of years, and every market turns bearish at one point. Also turns boring at one point. But this is a space to watch, because when and if we take out something like this, it could be the beginning of a multi-year rally. And there are different ways of measuring this, but the difference from here to here is $221 per contract. So I think if we take out this level, we can go up. We could probably even go all the way up here. So what could be drivers for that? A global recession. What is also could be a nice little driver is the fact that we could have some decent inflation in the US because of the tariffs, especially if new tariffs are introduced against China. So that could all lift the price of gold to the upside. So you definitely want to watch the space. And what you want to do is that you want to wait for a break to 1376. That's the level where things get exciting. Because, if we don't take out this level, it could easily be like here in February 2018. At that time, I was also talking about the same outlook. And what happened there is that eventually nothing happened. I turned neutral. The market was shifting sideways, and I said that on a break to the downside here, we're going to turn bearish. And the whole market declined as projected. So I think something similar may happen here on the break to the upside, but you need to wait for that. In the short term, the market itself is just trading sideways, so there's not too much to do here right now. Crude oil prices. So crude oil prices, I've been bearish from pretty much up here, from $60 per barrel. As I've been saying lately, the market is. Let me see. I just saw this. As I've been saying lately, the market is relatively close to the lows, so there's no real. One shouldn't be very, very heavily short here at these levels. Maybe somewhere in the middle, but now pretty much at lower ends here. And if you look at this from a big picture perspective, we have this bigger range, and we're starting to reach these levels. So definitely, when we can go down, I'm not saying definitely we can go down to maybe $48 a barrel, maybe 46, but I see it as a relatively unlikely they're going to trade below these levels, and then maybe from here gonna bounce back up again, and then we'll see. Unfortunately, this way this is looking right now, we're heading into a multi-year consolidation here as well. With the market sort of, I just draw that line, and I don't think it really matters too much, but realistically, trade cycles between that level and this level until maybe the end of the year, if not longer, and then maybe after that we could see if we have some really bullish moves. Now, if you look at this today, the market moved upwards, and in the short term the trend is still bearish. So I think people that are short, if they had to stop loss of orders up here, I think they would probably reduce them to 5493, which is the level here. And for people that are not in the market, so there's two options here. So these guys that are short, if they have been short, maybe they're going to try to get out here. But we're still dealing with a downtrend here. And I think if we take out 50.62, which is level here, then you take out that double bottom. And I think at that point we go down to 46. So I think that makes sense. And this is also an opportunity for new traders to short sell. So I think if we trade below the level, they're short here, stop loss goes below whatever the high is at that time. If this is the daily high, then this is going to be the stop. And then they'll try to target the lows. S&P 500, I was hoping for this market to trade lower yesterday, but it didn't. It did try below my level. This is the level, but it happened at 3 a.m. in the morning. So, this sort of breakout at 3 a.m. in the morning London time should not be acted on, because Europe is not in, US is not in, so nobody's trading at that time. So the market is obviously open, but there's very low, if any, liquidity there. Now, if you look at this today, I mean, the market is moving upwards, right? So I will be very, very careful. But here as well, we're dealing with conflicting signals, I think. I mean, I think that the price should not be here giving the world economic outlook. Uh, but as well, if you want to buy, you want to look for that break to the upside, because this as well has been trading sideways. So it's quite interesting to see, and it's been sideways for 1.5 years. So the S&P is trading sideways, the euro is trading sideways, crude oil prices from a big picture perspective are still trading sideways, even, and then you have gold as well trading sideways. So most, if not all, big markets trading sideways. You have, of course, some activity in crypto that could be interesting, and I think as well. Let's take a look at U.S. government bond yield. So this is the U.S. government bond yield. So here, though, this is sort of been, I guess, the market for this year. Government bond yield declined sharply here in March, and then quickly moved upwards, and then had another swing to the downside. Unfortunately, though, after the changes from the European regulator, it is impossible for the retail trader to trade this market anymore, because the margin requirements are high, and just to have any sort of worldwide exposure here, you need to trade with big sizes, and it doesn't just add up, because you need to hold like a very, very big position in this, and then you need to put down the margin. So it's ridiculous. The arithmetics don't add up here, and it's like that sometimes. Some years there's gonna be very little, if any, activity. So this is the time we all need to learn how to trade sideways markets. I tried that a few times over the last 12 years or whatever it is, and I still haven't found something that I want to trade with real money. Okay, let's see here, guys, if you have any questions. We have a question or comment from Keith Jones. Good morning to you, sir. Keith Jones says, Euro New Zealand dollar looks like a good candidate for a bullish rectangle breakout. Okay, let's take it out. The euro itself, I agree, is doing quite good. It's doing good against a few currencies. So we need to venture away from the majors and look into the smaller, all the crosses. Okay, so this is the Euro New Zealand dollar. Wouldn't really call this a rectangle. It is some sort of a sideways pattern, or it was stuck in some sort of sideways pattern like that. But I wouldn't necessarily call this a rectangle. But you can definitely call this a bullish trend. So I'm not sure you can, again, call this a rectangle. So with that in mind, I would not say you can, of course, do something like this, but I think that's a bit unrealistic. On the other hand, we know that the Central Bank of New Zealand is probably going to cut rates again. And we also know that, or could potentially cut rates again. And we also know that in the euro area, they're probably not going to do too much. And what's happening here, when everybody's sort of getting worried about the economy, sort of any yield advantage, or people borrow cheaply in the euro and invest that in other countries where the yield is higher. And I wouldn't say that the carry trade itself is very popular, but there's more demand for euros than there has been a lot of borrowing euros, and I think that's the flow that's going back. Now, as I said before, we can definitely sort of say that the trend is bullish, and if you look at this from a 6 hour, the market already had quite a decent little move. You could, if you wanted to, let me see here. So these are the monthly pivot point indicator, and they give you a rough estimate about what may happen in the month. So it tells you that the market might rally maybe up to 7,443. That could be something, and that sort of should be the cap of the month. You have the R1 here, which can also cap price, but I don't focus too much on those levels. I just focus on R2 and S 2, which is down here. Um, it's a bit difficult one, to be honest, Keith. I think you could probably do something like this if you want to, because the market doesn't. It's not that kind to buying breakout nowadays. I would not really necessarily buy here, but maybe eventually you have a bit of a pullback, maybe a level between the 50 and the 38 fib. That would be something like 71. Yeah, 71. It could be possible to potentially buy here and on that dip with the anticipation that, you know, this uptrend is going to continue, and then maybe from here sort of go up towards that level here. You could, if you wanted to as well, if you do want to treat this as a rectangle. I mean, it looks more like a rectangle maybe on the 6 hour. It's a double top at least. So if you're looking for that, maybe a break to this high could allow you to maybe scalp this, but I don't think it's gonna necessarily be a bullish breakout and directly hit target. I think it's gonna go up, go down, spend a bit of time here, but you could potentially work with that. So you have that bullish breakout, which is one option, and then you have that dip. So I hope that makes sense. Okay, I think we're gonna wrap things up, guys. I want to thank you so much for watching. I have some very interesting things coming up for you in the next 2 weeks. I've been working on a new website for ATFX. Well, it's not really ATFX websites, but it's a ATFX. It's like the other website I did for Amana Capital about 2 years ago. So gonna launch that hopefully in the next week or two. It's pretty much done, but still working on the details. What it's gonna be is that new website is gonna offer far more content, like written content, that I produce. You're also gonna find a few videos by some partners, and we just hired another writer as well that's gonna help out. So it's gonna be maybe some 15 odd articles every day. The idea is sort of to try to keep you in the loop of what's going on in the market, and the idea is to do things slightly different to what you would have found with other big websites. As you know, there's some websites that write very long and lengthy articles. Unfortunately, those are published once a day, so they're definitely helpful, but they don't necessarily provide you what you need at the time. And then there's some other websites that just produce a lot of content, which many times is just spam because they're selling advertising to you on the website. So 30% of all the articles they publish is just some silly comment just so you can see their adverts and they can make money. So there is those two sort of websites right now. We're going to try to go somewhere in the middle, so which is try to write timely articles that are of good quality. So I'm gonna show you more on that over the next probably next 2 weeks, probably soft launch early July, and then we'll just take it from there. Okay, guys, thanks so much for watching, and if you want to keep up with what I'm up to, don't forget to follow me on Twitter at AlexFX00. Don't forget, of course, to subscribe to this channel. That's going to help you to stay on top of things. And as well, now, actually, this is fine for now. Guys, thanks so much for watching, and I'll talk with you guys tomorrow. Don't forget to like the video. Thank you.